Click the bell icon to get latest videos from Ekeeda.
Hello friends, we'll be discussing how to solve a problem which is related to favorable balance when a passbook is into consideration. There is an illustration which has been mentioned down here. Let's go through that illustration and you'll figure out how to solve this problem. So as you know that when we're talking about a favorable balance, there is a logic that we follow. Whenever the distinction between the favorable and unfavorable logic is supposed to be considered, you just have to understand that when you're solving a problem which is related to favorable balance, in such a scenario, you have to make sure that the entry which is passed first, that means the first book that will take the capture of first effect of that transaction or entry is not supposed to be considered. However, the second effect, which is related to the books, that can be either cash book or passbook, is supposed to be taken into consideration, post which we'll go ahead and understand whether we have to add this item in that book or subtract that item in that book. And according to that, whether that book is correct or not, we'll go ahead and figure out whether we have to use the formula of addition or the formula of subtraction. Only after that we'll be able to provide a flawless bank reconciliation statement here. So when we're talking about a favorable bank reconciliation statement, when the starting point is as per the passbook, let's figure it out how to deal with such problems with the illustration mentioned down here. I'll be highlighting all the important points. You can do the same and note it down so that further when you go ahead with the working, you will be able to prepare it within a couple of minutes itself. Let's go ahead and figure out the first illustration mentioned. It is mentioned that the bank reconciliation statement is supposed to be prepared for Nikki and Company as of 30th of June 2011. The favorable balance as per passbook is shown as 10,392 rupees. So that means the starting point of this specific sum is balance as per the passbook. The first transaction that refers to the difference is there has been a deposit of rupees 3,092 into the cash book, that means into the bank account. However, the credit was seen only on 2nd of July 2011. This didn't cricket, so this didn't got credited by the end of 30th of June 2011 and it got credited only after 30th of June, which is 2nd of July. So this is the first transaction mentioned here. Let's figure out the second transaction. On 30th of March 2011, effective 1st of April, there was a hire purchase agreement that was supposed to be enforced where the bank would deduct an amount of 3,000 on a part of that agreement for which no entries were made in the book, that means in the cash book. So this entry is first recorded into the passbook. This is the detail that has been provided here and there is a deduction of the amount because this is a standing order mentioned here. There is also the other transaction that has been mentioned. A customer of the firm who received 4% discount here mentioned on an amount of 4,000. The bank, that means the cashier in the bank, erroneously mentioned the amount of gross. That means the total gross amount of 4,000 was entered here rather than the amount which is supposed to be discounted. Let's figure out what we have in the next transaction. Bank charges amounting to rupees 300 were not mentioned in the cash book. On 20th June, there was some direct deposits made into your bank account. First for rupees 4,000 for which no entry was made into the cash book. Second for rupees 1,200 where the amount was mentioned twice into your cash book. There was a bank charge of rupees 100 which was seen in the bank statements, which was for an unpaid check which was marked out of date. These details were then provided on 5th of July. That means in the month of June, there was no receipt or intimation of a bank charge here. Now, all these details are provided here. We'll further go ahead and make sure that all these illustrations are then further added as per the preparation of the cash book and passbook working. So, we'll go ahead and prepare the working now, and you'll understand how to go ahead and solve this problem, which is a favorable balance as per passbook start point. Let's figure it out. So as you can see that we have prepared the working note here. We have mentioned that the cash book is incorrect. However, the passbook is correct. Now, as we are dealing with favorable balance criteria, we need to understand that whenever there is a favorable balance criteria, whenever the first entry or any entry rather in that case, the first effect is not supposed to be considered, but the second effect is supposed to be considered for passing all the details. So let's go ahead and prepare it. Now, the first transaction refers to a deposit of 3092 which was made in June, but the credit was seen in the month of July. Now, as there is a deposit, what do you think this entry will be reflected first in which book? Will it be the cash book or will it be the passbook? That's correct. It will be the cash book. Now, as it is reflecting in cash book, whether it will be added or whether it will be subtracted, as this is a deposit. You're right. This will be deposited, hence it will be added. So there's an addition that you have to do. This refers to a wrong book, hence you will be subtracting this amount. Now, whenever you're talking about the passbook, if this is the thing that you're doing, that means this instance was first recorded in cash book. Hence, we are not supposed to take it that way. If the way that we taught right now, if you're going to do like that, the sum will be wrong because that is the criteria of unfavorable balance where you take the consideration of the first effect. However, in favorable balance, you have to understand that the criteria that you have to take into consideration is the second book. That means whenever a deposit is made, cash book has been already updated. Let's go into passbook and then they will understand that in passbook you have to add it. This is a correct book. That means you have to add this amount. So this amount will be added into the passbook. Now the next transaction refers to there was a standing instruction. That means because of the higher purchase transaction, there was an amount of 3000 which was supposed to be debited every month. But this was not mentioned in the cash book as the details were not available. Now, the first effect will be in the passbook as there is a direct debit that is happening. That means directly the amount is getting debited from your bank account. So unless and until you update your passbook, there will be no intimation about it. So as it is already subtracting, that means passbook has been already updated. Now you have to move towards cash book because cash book is the part where you have to understand that whether it is supposed to be added or subtracted. Now that it is supposed to be subtracted into the cash book is wrong. You will add this amount. So similarly, in cash book, you will be adding this part. The next transaction refers to a check or a check of rupees 3840. That means 4% discount on 4000. Now, the firm received a check for an amount which was supposed to be 4000. However, as the customer gave a check of certain amount which was after the discount of 4% on the account of 4000, that means the customer owed us rupees 4000. However, we gave him a cash discount of 4% on it. Now, when entering the amount, the cashier erroneously entered 4000 instead of an amount of 4% discount on it. That means if you calculate 4% discount on 4000, that would be 160 rupees. So the customer gave us a check of 3840. That means 160 minus 4000, that gives you a balance of 3840. This amount has been already recorded into the passbook as this has been already updated here. But in the cash book, we have erroneously mentioned it as 4000 itself. That means on the gross amount. Now, if you can see, the passbook is understated. However, the cash book is overstated by 160 rupees. So we have to subtract it because the effect has been already seen in the passbook. The effect is to be shown in the cash book. As you have to subtract it here, so we have to subtract. The book refers to the wrong book. That means the entry refers to a wrong book. You will be adding, but only the difference. That means 160 will be mentioned here as a difference. The next transaction refers to bank charges amounting to rupees 300, which have been already mentioned in the passbook, but there is no update into the cash book. So if you can see from this transaction, the transaction has been already mentioned in the passbook. So we have to see the second effect. As this is a bank charge, in cash book, it would be subtracted. So as there is subtraction, it refers to a wrong book. You have to add this amount, which is amounting to rupees 300. Now, the next transaction refers to which is a direct debit into the bank account, but there is no transaction mentioned in the cash book. So, the amount is rupees 4,000. There's a direct debit, that means the passbook would have been already accepted or agreed to 4,000 as that is already mentioned. The cash book is yet to be updated. As there is a direct debit that is increase, so in cash book also there will be addition. So, addition is supposed to be done as it refers to the wrong book where the effect is supposed to be captured. So addition, wrong book, you will get the answer as subtraction of this amount. So subtraction will be done here, which is supposed to be mentioned as a part of cash book item itself. The next transaction refers to 1200 being paid into the bank. That means being deposited into the bank, shown twice into the cash book. That means the effect of one entry, 1200 paid, 1200 mentioned into the bank account, 1200 deposited into the bank account has been already reflected into the passbook. So one entry is done. But in the cash book, we have mentioned it twice. So it was added twice. You have to subtract it now into the cash book itself. So now when you're supposed to mention that thing, as you have to cancel this, cancellation refers to the cash book which is wrong. So subtraction, cancellation, you have to add that much of amount. So this will be addition into the cash book. The last transaction refers to a bank charge of rupees 100, which has been mentioned into the passbook. However, there is no update into the cash book. Now, there is a bank charge which is already subtracted from the passbook. The next effect is supposed to be captured into the cash book here. Again, in cash book, it is supposed to be subtracted. As it is a wrong book, you will add this amount. So, that is the last amount that we have to add into the cash book. We have mentioned all the items into the working note now. So what we'll be doing is that we'll be preparing a specimen of bank reconciliation statement and we'll be mentioning the start point, post which we'll be adding all the items that are supposed to be added in both cash book and passbook items, and the items which are supposed to be subtracted will be further deducted, and then we'll figure out whether we have a favorable balance as per cash book or an overdraft balance as per cash book. Let's understand it. So now that you can see, we have prepared the bank reconciliation statement. We'll be mentioning all the items that are supposed to be added and the ones that are supposed to be subtracted, and we'll see whether we have a favorable balance or an unfavorable balance as per cash book. Let's figure it out. So we have mentioned all the items that are supposed to be added and subtracted. Let's figure out the balances here. continuation of topic. So as you can see that we have figured out how the balance as per the favorable start point would be passbook, then the cash book balance has been derived here. What we have done is that we have mentioned all the totals that were supposed to be added, and we have added it to 10,392, which was the start point of the sum. The final balance that we have figured out is 14,244. So whenever we have the starting point as favorable balance as per passbook, we have the end point as favorable balance as per cash book. So accordingly, whenever a favorable balance logic is supposed to be applied, make sure you follow one step here. The first one being, you never have to understand or you never have to figure out what is the first effect that is supposed to be taken. The second effect is more important. That means the second effect of every transaction will go into which book is the first criteria. Whether that book is correct or wrong will depend, or on that thing it will depend whether the addition will be added or addition will be subtracted as per the formulas of wrong and correct book it is. So once you understand this logic, you will be able to understand how to solve favorable balances questions and unfavorable balances as questions, be it for any passbook or cash book, either of it. So I hope this illustration gave you a lot of clarity as to how to solve problems which are related to favorable balances of passbook as the start point, or unfavorable balances as to any other passbook or cash book, whichever the start point may be. So thank you for watching this video. Stay tuned with Ekeeda and keep subscribing to Ekeeda.